Now let's look at contingent liabilities. A contingent liability is a possible liability that may become an actual liability in the future. A company accounts for contingent liabilities based on the likelihood of it becoming an actual liability. If it is probable, in other words, very likely to be an actual liability, we record the amount as a liability on a balance sheet, assuming the amount of the liability can be reasonably calculated. Next, if it is reasonably possible, in other words, it could happen, and the amount is material, it must be disclosed in the notes of the financial statements. And then last, if it is a remote possibility, very remote, in other words, not likely to become an actual liability, then it's not recorded or disclosed. So I guess a good example would be a lawsuit. If a company is sued, we may need to disclose that lawsuit even if a verdict hasn't been announced. So you've been sued. Let's say you've been sued for $1 million. That's a material amount for your company. So you go along and you expect to lose the lawsuit. You fully expect to lose the lawsuit. In that case, you must include that $1 million as a liability on your actual balance sheet. Now, if you've been sued and it's possible that you could lose, but it looks pretty good that you're not going to, like, it's sort of a toss up. You don't really anticipate losing, but there's still that slight possibility that something may come through and you end up losing the lawsuit. In that case, you don't necessarily have to put it in your balance sheet because it's not a 100% a good likelihood that you're going to include it. Um, then you would just simply disclose that you've been sued for $1 million. We anticipate we'll win the lawsuit, but just in case, we want you to know. Now, on the other hand, if it's just a completely frivolous lawsuit and there's just absolutely no way that you're going to lose the lawsuit, and you just know for a fact, I mean, it's just not even remotely possible that you could lose, then you would not need to disclose it or show that in your balance sheet. So that's an example of a contingent liability. There are many types of contingent liabilities. Another example besides the lawsuit would be a warranty. Now, the reason we decided to cover warranties is because it is a contingent liability that a lot of companies have to deal with. Every product that you buy that contains a warranty includes a contingent liability for the seller or the producer of that, the producer of that asset. So, for example, if you buy a car, it has a 3-year, 36,000-mile warranty. The company has to honor that. That is a contingent liability, a possible liability that is likely to occur in the future. So we have to record a warranty. A warranty can be calculated and is very common in the workforce. So let's look at an example. Parker Company sells a space heater which includes a 1-year warranty. So it's starting to get a little chilly here. It's in the falls when I'm recording this, so space heaters are on the market. And the space heater that our company sells includes a 1-year warranty. In December, we sold 3,000 space heaters were sold at $150 per unit. Management expects that 4% of the units will be defective and will need to be repaired or replaced. So with the warranty comes the aspect of, well, at some point we have to estimate something. When we sell a good, that's when the warranty expense should be recorded because the warranty actually needs to match the revenues it created. The problem is we do not know the exact number of units or the exact expense associated with that warranty that we're giving on those 3,000 units. So what we have to do is we have to look at our past, and in past history we say, oh, based on our historical data, about 4% every single time comes back to us. So we can reasonably anticipate that 4% of those units every time they're sold will come back. Okay? Then we have to average the cost. Well, of historical, the average cost of repair of a unit under warranty is $75 per unit. So we either have to repair it or we have to replace it. One of the two things, and typically speaking, it costs us about $75 per unit. And again, that's based on history. We've looked back through time to see what on average does it cost us each time a product comes in. In January, 4 units were returned under warranty. The company repaired the units at a cost of $71 per unit. Prepare the entry to record the December sales, assuming they were cash sales, any necessary adjusting entries at the end of December, and the January entry to record the warranty repairs. So let's look at the first part of this, and all of this takes place in a short period, but number 1 happens in December. So on number 1, we've got a December transaction. And in December, we've got this sales. We sold 3,000 units, or 3,000 space heaters at 150. So the first thing we have to do is record the sale. And remember, we said these were cash sales, so we're going to go in and say cash. And if we multiply that out, we take 3,000 times our 150 sales price. I believe we come up with $450,000. So that's the amount of cash we would have received from that sale. Now, what do we need to credit to offset that? Well, if we think about this, this is sales. So we would need to record a revenue because we've earned the revenue. In essence, our part of the job is complete. We've delivered for 3,000 space heaters. So we've earned that revenue. All right. Now the next thing, do we need any adjusting entries? Well, absolutely. So on December 31st, the end of our period here, we would need to go in and we would need to adjust the books to record that warranty. Notice the sales took place in December, so we need to record the warranty expense associated with those 3,000 in the same month. Well, how are we going to do that? Well, let's first talk about the debit and credit. This is a warranty, so it is an expense for our company, so we need to debit our warranty expense account. Your company may call it something slightly different, but warranty expense is a generic term because it is a warranty and it is expense for us when we have to repair or replace. Now, we'll find the dollar amount in just a moment. Then what do we need to credit? Well, we need to credit a liability account because in theory we owe our clients this warranty as repairs are needed. So it's definitely a debt or something we owe as a company. Well, what do we call it? Well, we don't want to call it a payable because payables imply that we owe money, and we don't owe money to our customer per se. But we do owe repair, so we're actually going to call it a warranty liability. Just something to show that we owe warranty repairs if needed to our customers. Now let's talk about the dollar amount. When we look at this, we think that 4% of units will be returned as defective. So really what we need to do, and I'll go right down here and say 3,000 units is what we sold. And of those 3,000 units, we anticipate 4% or 0.04 will come back to us. And when we multiply that out, we get 120. So we anticipate having to repair 120 units from this month's sales, these 3,000 units that we sold this month. Well, notice that's in units, and we need to convert it to dollars because we must journalize everything in dollars when we're talking about accounting, so we need to convert that. Well, on average, we determined that it would cost us $75 per unit to actually repair those units. So we know 120 units possibly could come back, and we anticipate that those will cost us $75 per unit. So when we multiply that out, we see that it would be about $9,000. So that's a reasonable estimate for us to actually go in and record. So now that we've calculated, we just simply go in and debit the expense for $9,000 and credit the liability for $9,000. And that's all there is to a warranty expense. Now the last step was to go in and record the January returns, and we had, 4 units were returned under warranty, and we repaired those units at a cost of $71 per unit. Well, what we'd need to do is go in and say, okay, we had 4 units returned at a cost of $71 per unit, and that gives us $284. So we know that we need to record something for $284. Well, is it an expense to us? Well, no, these were units from prior year that's coming back, so we need to pull those from the warranty liability account. So we're going to go in and hit the warranty liability to reduce that amount owed because 4 units have now been repaired. And then the credit side, well, here's where we have a little bit of issue because we really don't know, but it could be repair parts. It could be some type of payable account. Maybe you had labor. It could go against your labor expenses. It could go against your material expenses. So it's really multiple accounts here that you could end up using. Just to be generic, you would put repair parts for your materials, but it could be a multitude of different accounts, and almost guarantee a company would have a couple. You'd have the materials that you had to use in order to repair the space heater in this case. You would also have some labor, so you would definitely need to go against the labor in order to repair it. You'd have to have someone that repairs it, and you'd have to have the parts they used at least. So keep in mind, this could be different accounts based on what actually happened in the repair of that process. Also, if you were giving out replacements, You would simply hit your inventory because you're reducing the inventory to take out a space heater and send it to your customer. So keep in mind that credit could be many things. Just to keep it generic, I would just call it repair parts for the time being. But I did want you to understand that that could be different accounts that you would have to credit depending on what happened during that warranty.